Let's talk about stocks that offer dividends. Is it possible to receive more dividends from a stock? Well, no. But actually, yes, we could get a better return on our investment if we combine dividends and premiums from covered calls.
You naughty, naughty. You're teasing me, you naughty, naughty.
Let's see how we can make this happen. In this example, I'm going to use AT&T, and I know it's a cliche dividend stock, but at the same time, making good investments will never be unoriginal. So AT&T, say they offer 6% per year in dividends. Currently, it's a bit higher at around 7%, but we'll take the average of the last 5 years. And the current market price is $28.53, but we'll round it up to $28.50 per share. Okay, good. Let's do some big brain math here and calculate how much will you need to invest in order to get $1,000 per month from dividends. So in a year you would have 1,000 times 12 months equal $12,000. And we'll divide that by 6%, which we will portray as a decimal, so it would be 0.06, and that will equal to $200,000, which is also 7,018 shares. Now, most of us don't have 200 grand laying around between our sofa cushions, well, unless you're friends with Mr. Beast, but that's beside the point. The point is, you need $200,000 invested at 6% annual yield to make $1,000 per month. But what if we bring covered calls into this equation? Let's take a look at the option chain here, and I will search for options expiring 2 weeks from now. And I got my eye on the one with the strike price $30.50 with a premium of 9 cents per share. I won't go too deep on how covered calls work because there are many other videos on YouTube explaining that. Even I poorly attempted to make some. In general, if by expiration date January 8th, AT&T is above $30.50, then I would have to sell my shares at this strike price. If it's below $30.50, I will keep my shares. In both scenarios, I am collecting $9 in premiums. $9 because each of these option contracts are dealt in 100 shares. So 9 cents times 100 is $9, which is displayed right here. So ideally you would pick a strike price just far enough so you won't be obligated to sell your shares. Say I don't think that 2 weeks from now, which is January 8th, AT&T will go above $30.50. So that's why I will choose to sell this covered call. Let's do that right now. Add this to our order ticket, click continue. One contract, review order, and here you click submit, but because I don't own 100 shares of AT&T right now, I can't complete this transaction. So let's assume that we just bought 100 shares of AT&T at $28.50 per share, costing us $2,850. That means if we collected $9 in premiums and do that every other week, we will have $18 per month. Assuming that some weeks premiums are lower, some we didn't sell covered calls at all, so out of 12 months we only collected premiums 10 months. So 18 times 10 equal $180. And if we divide that by our investment of $2,850, we will get 0.06, which is ironically again 6% of our investment. So you see where I'm going with this, right? Not only will you be getting 6% from dividends, but also an additional 6% from covered calls. You remember that 200 grand from the beginning? How could you forget, right? Well, now with spending just 10-15 minutes every other week, it has been sliced in half, and you only need 100 grand to make 1,000 per month. And I say, oh, only 100 grand like it's pocket change. It's still a lot of money, of course, but I don't want you to focus on that. It's just a number. And look, because you watch this type of videos, it means you're smart, or you want to get smarter, and therefore it's just a matter of time before you get $100,000. It's just a number, don't give it too much power, you'll definitely get there. And I haven't even considered that with time, the dividends will increase in value. Also, AT&T, it's not going to stay at $28.50 forever, so since the shares will appreciate, so will the premiums that you will collect. But wait, there's more. Every month you collect the premiums and every quarter you collect dividends. You could reinvest that money to buy more shares, generating more money, and so on, compounding you to the moon and beyond. How cool is that? Is math related to science? I don't know, but I still like the idea of compound interest. Obviously, AT&T is just one of many stocks. I just used it as an example. There are stocks that offer higher dividends and there are stocks that you can collect more premiums with. If you time the market right, you can collect those 6% in premiums in just 1 month. 1 month. But of course, it's much more risk involved, and that's a story for another time. I hope you enjoyed this video, big brain math. If you did, consider subscribing. It helps this channel grow, and I hope your portfolio will grow as well. Good luck.